on the screen, you can see that I have made $6,500 on PayPal stock. The current price is 77.82, and then I've got a 401 shares at an average cost of 61.37. Now, I'm going to walk you through a video I did 1 year ago that talks about PayPal and how it's extremely undervalued using my OGT intrinsic value indicator, which is absolutely free. So I'm going to go into that video now, and it shows you how to use it and why I thought PayPal was undervalued. And now we can see PayPal starting to take off and starting to get to the intrinsic value we all think it deserves. So I really hope you enjoyed this video, and I shall see you guys on the other side. So again, I've got a full video on the intrinsic value indicator, which again I'll link to in the pinned comment down below. It's absolutely free on TradingView. Just search for OGT intrinsic value indicator. So the kind of way it works is it puts in some of your own assumptions. So the first thing you need to do is calculate what you think the EPS growth, so that's the earnings per share growth, is going to be per year for the next 5 years. I've gone for 13, 15, and 17. And the way I do that simply is I go to Yahoo Finance, type in PayPal, and go to the analysis section. And if you scroll down to the bottom, it's got the growth estimates. So in the next 5 years, it's saying the aggregate of consensus estimates is around 17%. So quite simply, I've put that as my high, and I've just worked backwards from there. It's just, I've not really put more logic into it than that. The next piece is your annual return. Now, this is the bit that is actually subjective, where if you increase this number, your valuation of PayPal will go down. If you decrease the number, the valuation of PayPal will go up. And what this is basically saying is, because this works, it works on year 5 and works backwards. It's saying, how much money do you want to make a year on this stock for it to be worthwhile, and it factors that in. So you can make on average 7 to 10% a year just investing in dollar cost averaging into the S&P 500. And again, I actually do make more than that because I'm selling puts as well. So we'll go on to that in a second. So I've just put 12.5%, right? So if I can make 12.5% on this, I'm beating the average of the stock market, plus any put income that I'm making, covered call income when I get put the shares. I'm probably making 15 to 20% outside when it's all said and done. So I've put 12.5%. And then the next bit is the PE ratio. So what is the growth or the speed of acceleration of the growth over the next 5 years of their earnings? And this is what the price to earnings ratio actually is. So what I've done here is I've gone with the multiples of 20, 25, and 30. And the way I get that, again, is very subjective in terms of what it is, and I've tried to be conservative. So I'm on macrotrends.net, I've selected PayPal, and what it does, it gives you the PE ratio over the last, whatever this is, 7 odd years. And you can see here that it's at its lowest here of 17.24, and that's because half the equation of the price to earnings ratio is price. Price has been dropping. And again, we put it at 17.24. At some point, I do feel PayPal will have to bottom out, and you can see that. And again, don't really want to talk about technicals there. You've got your down, then you have your kind of U shape where it bottomed out, and then it starts to do this to do this type of equation here. So that's what my assumption is, what will happen, and we've got this bottoming out here from a technical perspective. But I don't want people to get bogged down in the technicals of PayPal. I want to look at the valuation and the fundamentals of PayPal. So if I go back into here, you can see here that, again, I've gone with the low of 20 because I do feel PayPal's PE ratio is very cheap based on the historics. And if we go back to this, you can see here they had a high of 79 and at the beginning of this 32. So I've just used common sense here, not trying to overcook the numbers between 20 and 30. And if I do put the table back on, this will help you slightly in terms of how it works. So if we take our lowest assumption here, we think that PayPal's earnings is going to grow 13% every single year. So what it does, it takes the current earnings of 3.58 in year one, puts 13% on top of it, which extrapolates it out over the next 5 years. So in year 5, we'll have an earnings per share of $5.85 per share. Now, then what it does, it times that number by the multiple that you put in, or the PE ratio. So in our one, I think it was 20, I believe, just to remind myself. Yep, of 20. So times that by 20, and that's how you get $117. So what it's saying here is, if you believe these low assumptions that we have a growth multiple of 20 and a 13% growth, we say in year 5, PayPal will be worth $117. And then what it does then is it takes into account your 12.5% and then works backwards all the way to year 1 to give you the current year 1 intrinsic value of 73.04. Again, very high level. I'd go into this a lot more detail with the maths behind it and everything like that, but I don't want to get bogged down with that in this video here. But effectively what it's saying, what we have here is confluence that my valuation on the conservative side, and again, it probably is the reason why my numbers, my low assumption is a lot lower than probably the Guru Focus's number of wherever it is, this one over here, 141, is because I've done some very conservative assumptions on here, whereas probably the high assumptions, again, is probably still conservative, but probably is a more realistic view, and I think it's somewhere between 100 and 125. But my point being is, even with our lowest assumption, PayPal is currently below that assumption by about $12. So we're saying at $73, and then it's currently at 61. So if we even look at that, it's 73 minus 61, that's $12. That is still a 20% upside potential just to get the fair value, assuming that we're right there. So if we buy PayPal now, we are buying PayPal around 20% below its fair value according to my assumptions. But if this is Guru Focus's assumptions, we are nearly 100% lower in terms of the margin of safety that we have there. These are the kind of thought process that I go through in terms of, is the company making money? Yes or no? Yes, it is. Is the company cash flow rich? Yes, it is. Has it got strong balance sheets, cash flow? Can it survive with another potential Rona coming around the corner? Yes, it can. Okay, all these things are all good. Where is the price in relation to its fair value? Again, I look at Guru Focus to give me a view. It's green there. I look at it on my intrinsic value indicator using PE ratios and how much I want to make and returns, all this stuff. We are still below that fair value at $73. Absolutely brilliant. So what do you do now that you realize that the fair value of PayPal, let's say, is $73? So you could quite comfortably dollar cost average it or buy your amount of shares that you want to buy at this value. Very well, you can do that. However, what I do, and again, for those who are subscribed to my channel and watch my content, I'm selling puts on PayPal. And PayPal, all a put is, when you sell a put, it's saying, I'm willing to buy 100 shares of PayPal at a certain price by a certain date. That's all we're saying. Just a contract, and then the buyer of that option agreement will pay me a premium to hold that price. And again, I'm not going to go into any more than that, but effectively, I will make some money to buy someone's shares at a set price. So what I'm showing now is Tasty Trade, and this is an options trade. And again, you can get Tasty Trade, get some free shares down below. But what we have the option trade, and we've got all these different expiration dates. Now, generally, when I'm trading, if I was trading PayPal, I would normally go around 45 to 60 days out on the monthly cycle. So again, I'll probably start looking at the October 20th cycle if I was trading PayPal to make money. But because I want to own shares of PayPal, but I want to make money while I'm waiting, I'll probably go for a 1 week to 2 week expiration date in terms of put options. So what we're doing, we're looking at the right hand side here, we're selling puts, right? And the market is closed, it's Saturday today, but I just want to give you a view. So PayPal's currently trading at 61.54, and you can see this orange line here is anything below that line or above that line. This view is in the money, and everything that is out the money. So let's just say I'm quite happy. I know the fair value is 72. Google Focus says 141. I'm quite happy to own PayPal shares at $61. So what I can do here is sell a PayPal put expiring in 13 days, August 25th, and I will make, or someone will pay me between $109, $1.09 per share to 113 cents per share. Because we're doing one contract times by 100, our max profit is $109. Now, no one can take that $109 away from me because I am going to, because I want to be put in the stock. I don't want to close out the trade. I don't want to do anything. Even if PayPal drops to 55 in the next 13 days, I am still obligated to buy 100 shares at $61. So I'm quite comfortable with all of this stuff. Now, I'm making, let's call it the mid price of $109 here to go and do these shares. Now, PayPal could jump up to $80 in the next 13 days, but I still make $109. Now, some people would say that this has happened to me with Meta as well about 18 months ago when Meta started to bottom out, is why don't you just buy PayPal shares instead of selling puts? Right? Because if it does go up, then you can ride that wave. Because if you sell puts and the price never gets below 61 and it goes up, I'll be kicking myself. And that is a risk I'm willing to take. I get it, understand it, but I'm trying to say, that's why I'm trying to go in and around the money. I don't want to sell the 62, right? I might make more money because I'm currently in the money by doing this because PayPal is below $62. I would rather PayPal drop a little bit by 50 cents, pick up $109 and accumulate 100 shares. That's what I'd rather do. But so I really hope that kind of makes sense to you. And let's just say, for example, that I already own 100 shares at $62. Now, what I can do now is utilizing options. And this is how you can bring in the money as time goes on. Let's just, if this was the case, I'll go a bit further out. Let's say I own 100 shares at $62. I would go to the monthly October cycle, and let's say I would then sell a $70 covered call. And what covered call is the opposite of selling a put. It's instead of buying, you're willing to buy 100 shares at a set price. You're willing to sell 100 shares at a set price. Right? So what's going to happen here is if someone's going to pay me $111 to take my shares at $70, now that's actually pretty cool because I bought the stock at 62 in the example that we talked about there, and that's an $8 gain. So 8 divided by 62. So I've made a 13% return on my money, plus the $100 I sold the put for, assuming I sold a put and got signed at 62, plus another $100 selling that covered call, which I get to keep if my shares get assigned. But the other thing is about this is, let's say PayPal only gets to 65, right? So I made money on my shares and unrealized because I don't have to sell my shares, but I keep the $111. So what I'm trying to do is ride when I go back to it over here, when, not if, PayPal starts to do this and whatever Meta's doing, I'm going to try to sell covered calls above and try to hopefully time it. Might get absolutely blown out, and this is what happened with Meta. Is if we go to Meta, so you can see what's kind of happened there is you can see that the rise of Meta is absolutely ridiculous. It's such an aggressive line here, and now we're starting to see some pullback slightly in terms of this. I wouldn't worry about this intrinsic value indicator for Meta because it's pulling the same numbers for PayPal, so I wouldn't worry too much about that. But what I'm saying here is I could be selling covered calls at these areas. However, if the velocity of the move is so great and I blow through my call strike in a short space of time, there's not much I can do. Now, that would be quite annoying considering I don't benefit from all the upside. However, this is the type of thing I'm expecting to happen when it comes to PayPal. I do believe it's going to happen. I don't know when, but because it has an aggressive move down, bottoms out, who's to say can't have an aggressive move up? And Meta was more of a V shape than a kind of U shape, but that's just my assumption with it. And again, this is more educational videos in terms of how to find the value of a particular stock, and then what I do then to start generating income and bringing in money while I wait for the stock to get to that desired price. So I really hope you found this video useful. Bit of a slightly different video than what I've previously been doing. Drop me a like, drop me a follow, and I shall see you guys in the next video.